So I want to put a real quick video out there to kind of help you through. I hope you're doing okay. I know that the last month or so has been kind of crazy. Um, Imagine being at home with 4 kids. It's been nuts. You'll probably hear them while I make this video. But I wanted to just put out a quick word to you and first say that I hope you're doing well. I hope your family's healthy. I hope that you're staying sane and getting out and enjoying some of the sunny weather we've had the last couple of days. We took a walk yesterday. It was fantastic. I'm going to try and get out and do it again today. Maybe even get to a park. And really just got to enjoy ourselves. Um, but in a couple of days, you're all going to get your 401k statements, and there's going to be a little bit of panic involved in that if you haven't felt that panic already, or your retirement account statements, or whatever investment statements you have. The first quarter statements are about to come out. I want to just kind of give you a quick, just some pictures. I don't even want to talk numbers, but just some pictures. This is the U.S. stock market since 1996. You see a couple big drops, where this has happened in the past. But right here, that is this quarter. I mean, that's what you're going to see on your statements. But I still want you to see this. Since 1996, we're up. Market is doing good. It's strong. The U.S. economy is doing well. We know these things are going to happen. We're used to them. We're not going to let them panic us. We're not going to let them scare us. Okay. We've got another interesting thing to look at is just this line here is from 2010 until today. So you see, again, we see a big upward trend. But I also want to show you this jump. Now, this jump here is a little different. This isn't what the market does. This is the volatility. This is what we've been living with over the last month and a half or so. One day the market goes up 10%, the next day it goes down 10%, then it goes up 8%, then it's down 9%, and then it's up 4% and down 7%, and it's just this crazy trend of give and take from the market right now, and that's high volatility. And when high volatility happens, the market trends down. So we're going to continue to trend down until people calm down. This volatility spikes tend to involve some kind of panic and some kind of worry and some kind of concern. So that's just kind of what it is, and we'll get through it. Don't be a person who adds to the panic and worry and concern. Just be someone who realizes it's there and it's happening. And then the last thing I want to show you is this. This is since 1900 until today. The U.S. does really, really well. It's up exponentially since 1900. We've been through 2 world wars. We've been through a Great Depression. We've been through, the 1918 Spanish flu. We've been through a lot as a nation, similar to what we've gone through, and this is the trend of the market. So even though your accounts are down, just keep thinking about that big upward sloping red line. And let me give you a couple tips on what we can do that might actually help you to get through this crazy market. On how to get through this market and what you can do to help your accounts either recover or just continue to grow. There's some good opportunities when the market goes down like this to take advantage of. First one is if you've got cash on the sideline and you're sitting on a large chunk of money in your checking account, you just haven't been sure what to do with, this is the time to do it. When the market's down 20, 25, 30%, you put the money in, you've made money. Even if the market continues to go down and it goes down another 10% or 20%, you bought in when it was 20% lower than it was a month earlier. All that value didn't just automatically disappear. Our companies didn't fall apart. And even though a whole bunch of people are getting sick, we're still a very strong company. So it's a really good move to take some money and invest it. How do you invest it? The question becomes, well, I think you buy a mutual fund or an exchange-traded fund, an ETF. I think you buy something that gives you exposure to the whole market, either a series of ETFs that's well-balanced and diversified, or you buy an ETF that is just a portfolio-based ETF. So a good example of that would be like the Vanguard Growth Allocation Portfolio. So the Vanguard Growth Portfolio is growth stocks. The Vanguard Growth Allocation Portfolio, it's one of their mutual funds, is a mutual fund that has in it different mutual funds. So it's a fund of funds, and it just builds a full portfolio for you, right? I don't know if that's the right pick for you, but that's an example of what I would recommend for my clients. And what I'm actually doing for my clients is building those type of portfolios. So buy something that has exposure to everywhere, so that you're getting the up that the whole market does, and you're decreasing the chance of missing out on what's going on. It's really less about, in this instance, it's less about losing less money. It's more about losing out on the upswing. All right. A second test that you can do, Roth conversions are really good ideas right now. So if you have a lot of money in your 401k, IRAs, and someday you're going to take that money out at retirement and you're going to pay taxes on it, this is actually a really good time to convert it to a Roth if the Roth conversion is something that's on your radar. Reason being, you had $50,000 or $100,000, and now it's 70 or 35. You can convert a higher percentage of that over into the tax-free money without paying tax on the higher values you had a month earlier. So it saves you on taxes. It's a really good strategy and a plan. On the third one that we're talking about, and then I'll let you guys go, the third strategy you can have is if you've got an account that has a lot of long-term capital gains. Maybe you bought something in the 90s, or you were gifted something from your parents or grandparents as a gift. This is a really good time to sell that out. Take some of those gains off the table. If you have some taxable losses, you can pull those taxable losses out, and then you will decrease the amount of money you have to pay in taxes on it. So if you have things that you're interested in selling because you've had it for a long time but you didn't want to sell because of the tax penalties that you might, penalties, not really penalties, it's congratulations, you owe us tax because you made money. But if you're looking to sell out of it, this is a good opportunity to do that. As always, if you have any questions, you can always reach out to me, send me an email, give me a phone call, sign up for a time to talk on my website. I have a calendar link right there. I'll share with you also. And then just let me know how I can help. I'll be happy to help you out. I hope you guys have a good day. Enjoy the beautiful weekend we have.